Good day, crypto trader. Bitcoin price prediction: is the crypto bottom here? Bitcoin price slips below weekly open, suggesting the possibility of a 10% downswing to $17,924. Ethereum price will follow BTC's and retest the $993 support level. Ripple price faces third rejection at the $0.336 hurdle and leans toward a correction to $0.306. Update: Bitcoin price predictions are torn between those who forecast a potential bottom for cryptocurrencies and BTC, and the ones, like billionaire investor Mark Mobius, that see the current consolidation just above the psychological $20,000 level as a stop for the bears before they keep marching towards new lows. After testing again the aforementioned round level, Bitcoin has bounced back on Thursday and it is trading above $20,500 at the time of this update, 13:45 GMT. With US stock markets staging a rebound, trading in the green for the fourth consecutive session, cryptocurrencies could potentially follow suit if the market mood improves. That also has turned XRP price predictions a bit more optimistic, as the Ripple token trades in the thinnest range. The court saga between the payment giant and the US SEC is awaiting resolution, and XRP community is staying on the sideways before taking a new direction. Bitcoin price shows signs of exhaustion as it reverses the bullish trend seen over the past 3 days. This has caused Ethereum, Ripple, and other altcoins to take a back step as well. Going forward, investors can expect this minor retracement to evolve into a foothold that bulls will use to extend the run-up. Bitcoin price plans its next step. Bitcoin price climbed past the weekly open at $20,535 and swept Monday's high at $21,068 on June 22. This bullishness caused a lot of altcoins to trigger exponential rallies. However, the exhaustion of buying pressure seems to be leading to a correction that has pushed BTC from $21,705 to $20,416. This 7% downswing is likely to continue until BTC retests the $19,416 support level. Here, buyers have a chance to rescue the price and lift it higher, continuing the uptrend. However, failure could see Bitcoin price slide lower and sweep Monday's low at $17,924. On the other hand, if Bitcoin price produces a higher high above the June 21 swing high at $21,705 and stabilizes above $21,068, it will invalidate the bearish outlook. This development could see BTC further rally to $23,000. How $1 extra gain could trigger a 35% profitable rally in Solana. Solana price has bulls drilling on an ascending long-term trend line. Sol price is expected to rally 35% towards $50 once bulls can jump above the trend line. Traders could be in for an upside surprise as cryptocurrencies are diverging from the ruling US dollar. Solana, Sol, price is on the brink of jumping a whopping 35%, as the only element that stands between the bulls and those gains is the longer-term ascending orange trend line, currently playing hard to break. On Tuesday, a false break above triggered a squeeze and bull trap. On Thursday, bulls are back knocking on the door of the same trend line, looking to pop above it with just one extra $1 to cross at the time of writing. Breaking above this level could trigger a massive buy frenzy, with bulls trying to be part of this bullish breakout, and price action running up towards $50. Sol price could see a buying frenzy. Solana price is on the cusp of giving bears a knee-jerk reaction as bulls are drumming at the gates from the orange ascending trend line. A Black Friday sale springs to mind, as a breakout above that long-term trend line would spark massive buying momentum, with bulls jumping on every price in sight to be part of the rally towards $50. With that buy-side demand overweighting the offers, expect to see some bears closing out their positions and possibly bringing Sol price to the edge of the current downtrend. Sol price thus only needs an extra $1 to jump to $37.70 and pop back above the orange ascending trend line. This indicator formed a bull trap earlier this week, but the current market diversion between cryptocurrencies and global markets could avoid a repetition of this pattern and see a solid rally into the $40s. If this sentiment continues towards the weekend, the 55-day simple moving average at $50 comes into play as the first cap to the upside, muting price action for further gains. A simple repetition of Tuesday could hurt bulls in their attempt and see them trapped yet again. With investors fed up, losing money on trades that go nowhere and only return losses, it is feasible to see a scenario where bulls leave the scene and trigger an initial drop back to $30 and subsequent $25 in a tiered path to the downside. That would result in a roughly 27% drop and back to the lows of 2022. This is the biggest challenge Cardano price faces. Cardano price faces the 8-day EMA coinciding with the weekly open at $0.484. Investors can expect ADA to rally 13% to retest $0.550 after clearing this hurdle. A 4-hour candlestick close below $0.435 will invalidate the bullish thesis. Cardano price shows an interesting outlook as it faces off a resistance confluence. This hurdle will decide which direction ADA will proceed in the near term. Considering the consolidation and the recent recovery rallies, investors can expect a bullish outcome. Cardano price at inflection point. Cardano price has tried overcoming the 8-day exponential moving average, EMA, twice over the last week and was rejected both times. After both of these corrections, ADA's consolidation is again slowly heading toward the said EMA at $0.484, which coincides with the weekly open. Hence, this confluence makes it a tough challenge for bulls. However, overcoming this blockade will indicate that the bulls are serious and have enough juice. This development could further propel ADA to the next hurdle at $0.542 after a 13% rally. Interestingly, this resistance barrier is also a confluence due to the presence of the 34-day EMA. In some cases, Cardano price might extend the run-up and tag the 50-day EMA at $0.588 or reach for the round number at 60 cents. This move would constitute a 21% ascent from the $0.484 level and is likely where the upside is limited for Cardano price. On the other hand, if Cardano price faces rejection at the $0.484 confluence, it will indicate the weak state of the buyers and not enough bullish momentum. This development could see ADA retrace to the $0.435 support level. Here, buyers would have a chance at a comeback. However, a 4-hour candlestick close below this level will create a lower low and invalidate the bullish thesis for ADA. This situation may further result in a capitulation that could potentially crash Cardano price by 12% to $0.380, the weekly support level. Ethereum investors capitulate, but has ETH price bottomed? Ethereum price faces the 8-day EMA at $1,131, which has rejected the recent bullish attempt to move higher. Investors can expect ETH to head up to $1,500 if the aforementioned level is overcome. A daily candlestick close below $993 will shake buyers' confidence and invalidate the bullish outlook. Ethereum price has been hovering around a significantly important resistance barrier. This key level prevented ETH from climbing higher in the recent rally. However, things might change soon for the smart contract token, which could result in a quick run-up. Ethereum price ready for another move. Ethereum price seems to be turning over a new leaf as seen on the daily chart. After creating a lower low on June 18 at $878, ETH rallied 35% and created a swing high at $1,192. While this recovery was impressive, the altcoin is looking to set a higher low, suggesting that a full-blow recovery could be in play. Invest can expect Ethereum price to trigger a run-up to $1,543, the immediate resistance barrier if it can overcome the 8-day exponential moving average, EMA. This level has been a hindrance for ETH since its recent breakdown on June 1. Any attempts after this development have failed to propel ETH price higher. As a result, Clearing this hurdle will indicate that the bulls mean business and will likely catapult Ethereum price up by 42%. Here, the 34-day EMA coincides with the $1,543 hurdle, making this confluence the upper limit for ETH. Capitulation or more woes. Supporting this bullish outlook for Ethereum price is the steady incline in the number of investors holding between 100 and 100,000 ETH, which has increased from 44,100 to 44,600 between June 9 and June 23. Roughly 500 new addresses have joined the Ethereum blockchain, suggesting that investors could potentially be buying the dips. Further adding credence to a potential bottom for ETH is the decline in the number of deposits seen in the ETH 2.0 staking address. So far, roughly 12.0 million ETH has been deposited into this contract. However, the number of deposits has declined over the last 2 months. On May 2, the deposits spiked to 1,811 ETH, but have since fallen to 283 as of June 23. This sharp decline in users interested in staking their ETH suggests that investors have been capitulating due to the recent crash in Ethereum price from $4,900 to $1,100. Adding a tailwind to the bearish scenario is the recent uptick in the amount of ETH held in exchanges from 15.87 million to 16.33 million. Roughly 460,000 ETH were sent to centralized platforms in under 2 weeks. If Ethereum price were to suddenly take a small downturn, these investors could panic sell and add to the bearish momentum, resulting in a cascade. Therefore, despite the recent recovery, market participants should exercise caution. Lastly, the number of new addresses joining the ETH blockchain has also remained stagnant, indicating that investors are not keen on purchasing Ethereum at the current price levels. The 7-day moving average of this metric has reduced from 73,277 to 67,077 between June 16 and June 23, representing a net decline of 8.4%. While the technicals are presenting a favorable outlook for Ethereum price, they are reliant on ETH overcoming the 8-day EMA at $1,131. Furthermore, the on-chain metrics are not painting a bullish picture and suggest the possibility of a further downtrend, at least from a macro perspective. If Ethereum price produces a daily candlestick close below the $993 support level, it will create a lower low with respect to the candlestick close seen on June 18. Such a development will invalidate the bullish thesis and trigger a 12% correction to $878, the June 18 swing low. Here, buyers could regroup and give the recovery rally another go.